Welcome to the Deep Dive. We're from Defiant, the on-chain lifestyle sports brand.
Glad to be here.
Think of this as, well, your shortcut. We're here to help you get up to speed on what's actually happening in DeFi, entertainment, NFTs, GameFi, and sports.
Right. Without all the noise.
Exactly.
Yeah.
You want to know what matters? Fast.
Yeah.
And we're going to break it down for you.
Yeah.
No overload, just the essentials.
We're not just, reading the news. We're digging into the why. Why does this stuff matter? What's the real impact?
Perfect. So let's jump right into the crypto world. I saw this stat, and honestly, it's pretty eye-opening.
Oh, yeah.
16 months since the spot Bitcoin ETFs launched, right? Grayscale's GBTC, one of the OGs. It's still bringing in more revenue than all the new ones.
All of them combined.
Combined.
Yeah.
We're talking like implied annual revenue over $268 million for GBTC.
Wow.
Compared to maybe $211 million for the entire rest of the field put together. How is that even possible? Why is this one fund still so dominant?
Well, it really speaks to the power of being first, right? And trust.
Dust and liquidity.
Exactly. Grayscale had that huge head start with their Bitcoin trust. And even though their fees are higher than these new ETFs.
Significantly higher in some cases.
Right. But a lot of investors are just sticking with them. It seems like overcoming that, inertia, that established brand name, it's a really big hill to climb for the newcomers.
So it's not just a race to the bottom on fees then. There's brand loyalty, maybe just convenience.
It seems that way. It really makes you wonder what these newer players need to do to actually chip away at that market share. It's more than just price.
Interesting point. Okay, sticking with Bitcoin, let's flip to the supply side because the numbers there are also pretty striking.
The ETF buying versus mining output.
Yeah. So the data suggests U.S. spot ETFs snapped up something like 33,500 Bitcoin in just 1 week recently.
Okay. And mining.
Miners, in that same week, only produced about 3,150 Bitcoin total.
Whoa. That's a big gap, more than 10 times the demand from just those ETFs compared to new supply.
Right. So what does that imbalance tell us?
Well, from a purely supply-demand perspective, it points towards long-term price support, doesn't it?
You think so?
I mean, if you consistently have way more buying pressure than new coins being created, basic economics says the price should feel that pressure upwards.
So this isn't just a temporary thing.
It reinforces that whole narrative,
Yeah.
Bitcoin as digital gold, a store of value. And importantly, it suggests increasing scarcity. For you listening, it might mean that getting Bitcoin at, current prices might get harder as more institutions pile in.
Right. The window might be closing or at least narrowing. Okay, let's pivot a bit. Let's talk entertainment, specifically the often wild west of NFTs.
Yes. Always something happening there.
There's a legal fight brewing. Nike's getting sued. NFT buyers want over $5 million. This is tied to the shutdown of RTFKT.
RTFKT, yeah. The studio Nike bought, that was a big deal acquisition.
So what's the claim here? What are the buyers arguing?
The core argument seems to be that they lost significant money. Their NFTs, the value of these projects under the RTFKT umbrella, collapsed after Nike took over and eventually shut things down.
So they're blaming Nike's handling or lack thereof.
Essentially, yes. They're testing the waters of corporate responsibility in this very new digital asset space. Can a big brand buy an NFT project and then let it wither without consequences?
Okay, but why should someone who, isn't holding these specific NFTs care about this lawsuit?
Because this could set a huge precedent, really huge.
How so?
Well, if Nike is found liable, think about it. It could encourage a lot more lawsuits against other big companies that maybe jumped into Web3, launched some NFTs.
Got the hype.
Exactly, got the hype, made some noise, and then maybe didn't have a real long-term plan or commitment. It basically tells brands they can't just treat these digital assets like a short-term marketing stunt and walk away if it gets difficult.
It forces more accountability, more thoughtful planning.
Hopefully, yes. More responsibility when your big brand name is attached to these digital things people are actually spending money on.
Definitely one to keep an eye on. Okay, changing gears again, but staying in that sort of digital entertainment sphere, GameFi, and specifically the Ronin blockchain, seems like it's really buzzing lately.
It really is, yeah. If you look at, say, crypto Twitter, which is often a decent proxy for, mindshare and developer buzz.
The sentiment check.
Right. Ronin is leading the GameFi conversation there. They've got about 0.98% of the share, which might sound small, but...
But context is key. How does that compare?
Well, get this. It's nearly triple the share of Immutable. And Immutable is another major player in blockchain gaming.
Wow, triple. That's
Mhm.
that's significant dominance in the conversation. Is
Over.
it just a recent spike?
Doesn't look like it. The data shows it's pretty consistent. Ronin's number 2 in daily chatter, but number 1 across weekly, monthly, and quarterly views.
Okay, so sustained interest.
Yeah, it points to a really active, really engaged community around Ronin. People are talking about it, developers are interested. That kind of sustained buzz is important.
And why is that community aspect so critical for GameFi platforms specifically?
Oh, it's absolutely vital. In blockchain gaming, that vibrant community, it's kind of the engine.
How do you mean?
Well, an active user base attracts developers, right?
Mhm.
Devs want to build where the players are. And then good near games bring in even more players.
Ah, okay. The network effect.
Exactly. It's that positive feedback loop. The platform just gets stronger and more valuable as more people join in. So high mindshare is a really good sign.
Makes perfect sense. But it hasn't all been smooth sailing or positive headlines for Ronin recently, has it? I saw something about them parting ways with a game project.
That's right. Yeah, there was an announcement. Ronin leadership, they decided to end their relationship with the developers of a game called Ragnarok Monster World.
Okay, why? What happened?
The reason they gave was a breach of their agreements. Apparently, the Ragnarok devs secretly made a deal with a different blockchain while they were supposed to be building exclusively or primarily on Ronin.
Ooh, that's not good form in this space. So Ronin's response?
Pretty firm. They came out publicly and said they won't support or endorse the Ragnarok project anymore, and specifically called out that they wouldn't support its token launch, the ZENY token.
So drawing a line in the sand.
Absolutely. It sends a really strong signal, I think, to other developers. It says, look, trust and loyalty matter if you want to build here.
What's the bigger picture takeaway from that move then? For Ronin and maybe GameFi generally?
I think it reinforces how crucial integrity is, especially in these still developing blockchain ecosystems. Ronin's basically saying, we'd rather protect the long-term health and trust within our community than keep a potentially popular game that broke the rules.
Prioritizing platform integrity over maybe short-term metrics.
Exactly. It sets a standard. It tells developers building on Ronin what's expected. It's about building a sustainable, trustworthy platform.
Okay, so let's kind of pull these threads together. We've got Grayscale showing serious staying power in Bitcoin ETFs, suggesting brand and trust still matter hugely.
Right, even against lower fee competition.
Then there's the Bitcoin supply squeeze, with ETF demand vastly outpacing new mining, signaling potential long-term scarcity and price effects.
A fundamental supply-demand story playing out.
Over in the NFT space, the Nike lawsuit could force major brands to be much more careful and accountable with their Web3 projects.
Yeah, potential precedent-setting stuff there.
And finally, in GameFi, Ronin is capturing significant community attentions, that crucial mindshare, while also making tough calls to enforce platform integrity.
A combination of strong community growth and setting clear standards.
Yeah.
It's a really dynamic picture across the board. You see these established finance players and brands trying to figure out crypto and Web3.
Well, these newer platforms are building communities and trying to define the rules for their own ecosystems.
Exactly.
So thinking about all this, as we see these giants from traditional finance and global brands trying to adapt, and simultaneously see platforms like Ronin really focusing on things like community trust and network integrity, what kind of fundamental changes do you think we'll see? How might ownership and just engagement with digital assets really shift in the next few years?
That's the big question, isn't it? How does all this tension resolve? It's definitely something worth mulling over.
Absolutely. And look, we know you're busy. That's why we do this deep dive to give you that shortcut, the key insights on these critical shifts, so you stay informed without drowning in data.
Until next time.